Welcome to the Wilde Wealth Way. This podcast is powered by the team at Wilde Wealth Management Group, an award-winning financial services firm that provides comprehensive retirement, investment, real estate, insurance, legal, and tax planning services all under one roof. In each episode, professionals from the firm and our trusted partners will delve into topics ranging from retirement and the stock market to tax planning and insurance. We will even assist getting your kids into college and help get it funded. Welcome to the Wilde Wealth Way podcast. I'm Jackie Yoder, COO of Wilde Wealth Management Group. I'm joined today with Doug. He is our CIO, our Chief Investment Officer for Wilde Wealth Management Group. And we just wanted to say thank you to Doug for joining us today, taking time out of his busy schedule and obviously joining us after market close today. So we just wanted to say thank you for being here. And Doug joined Wilde Wealth in May of 2014. He uses a very deliberate yet dynamic process for his own clients, and he carries that forward in helping all of Wilde Wealth clients as well, and helping all the other advisors with their clients in our company. So we're honored to have him join us today, and just wanted to kind of start by asking you, how did your journey at Wilde Wealth begin?
Well, let's see. My journey to Wilde Wealth probably began in like 1986. And that's, Wilde Wealth didn't exist then.
That's right.
But Bill and Susan and their family were neighbors of my family. Trevor and my oldest went to high school together, grew up together. And Bill and I were involved in various Boy Scout activities with John and Trevor, Seth, and my son Greg as well. So that was kind of the introduction. I came here in 2014 from another registered investment advisor where I was the chief investment officer. And I just had seen what Bill and Trevor were doing and was excited to maybe be part of it because I really liked the way that they did business. So over the course of several months, we negotiated things and finally came to an agreement, and I showed up. Awesome.
Very nice.
Thrilled to be here.
Yeah, no, we're glad to have you part of the Wilde Wealth team, obviously, but you're very correct. Bill and Trevor they're awesome to work for. So
yes, they are great to work with.
Yeah. So tell us a little bit about your wife, Terry, and all your children, all your grandchildren, and all the fun that has.
Well, let's see. As Jackie mentioned, my wife's name is Terry. We got married in 1976, so that was like 45 years ago. And we have 3 kids, 2 of whom are married. Our younger son is divorced. He has 2 children. And his oldest daughter, technically stepdaughter, but none of us count her that way, also has 2 children. So we have 2 great-grandchildren. We have 7 grandchildren, and we just inherited. We were just gifted with 9 grand puppies.
Oh, wow.
Our son John and his wife have 5 kids ranging from 7.5 to 16.5. And they have a couple dogs, a male and female, who are now mommy and daddy.
Oh. Mm-hmm.
If you want a really cute puppy, they're gorgeous. They have 9 of them. They're trying to. That they will be looking for homes. They're just
you barely, sure about that?
Well, probably. Their youngest, our granddaughter Charlie, has talked for years that she wants to be a veterinarian. And she's talked about fostering dogs, and they were thinking about doing that. Now they have 9 puppies to foster, and they've informed her that this is practice for fostering dogs. They come into the home and then they leave.
They leave. Yeah. Well, that's a good life lesson.
Yes. Yeah. The puppies are gorgeous. They're hilarious. Aww. And they're just barely starting to open their eyes and not really walking yet. Stumbling around, crawling, puppy. Yeah. So That's the family. Our daughter is married. She and her husband do not have any children. So who knows? There may be more grandchildren
Could be
in the
more
future.
grandchildren, yeah.
And we'll see what happens. We absolutely adore our family. We are thrilled. They all live close. Our adult son Greg lives with us. His daughter and her children live about 5 minutes from where we do. Our oldest lives 20 minutes away from where we live, and our daughter and her husband live about 20 minutes away from where we live. So
yeah.
we are blessed that we get to see them all the time. In
Yeah.
fact, our youngest grandson is spending the night at our house tonight.
Oh, perfect.
So,
that's so sweet.
Summertime.
Well, you were one of our employees that worked from home during COVID. How was that for you?
There were a couple challenges, but I got through those really quickly.
Yeah.
And I have to admit that I really like it because I have about 5 more hours in my week that are a chunk of that goes to work, and some of it actually I get personally, and that I really like that.
Yeah.
I also invested a little money and upgraded my home office, and technology in my home office actually is a little better than it was when I was here.
Wow.
So
okay.
I do. We have kind of missed the camaraderie and a little bit of interpersonal stuff. Of course, given the fact that I deal with advisors who are everywhere from Indiana to Albuquerque to Tempe to Scottsdale to Glendale to Payson. It wouldn't matter which office I was in. The bulk of what I would do would be remote anyway.
Mm-hmm.
So
it's true.
And just kind of an inside office politics here. The office that I used to occupy here in Scottsdale is about 75 feet from Trevor's office, and he would text me. He didn't want to take the time to walk all the way down here and talk to me. And then, of course, he's probably afraid I would talk to him about more than what he wanted. And then,
he's probably multitasking, actually.
Yeah, absolutely. He was probably texting me while he was responding to an email while he was on the phone with somebody. That's probably what was going on.
Yeah.
But, contact with Trevor, doesn't make any difference where I am and where he is. He's going to text me.
He will find you. Don't worry.
He did call me today.
Oh.
A couple times a week he actually calls me.
Okay.
So that was good.
Good.
No, so I'm comfortable either way. I don't know what the future's going to bring, but you can always reach me at the phone number.
That's right. Yeah.
Or email.
Well, can you give us a brief overview of kind of the economy right now, what's going on, and just kind of a high level view of that?
Sure. The economy's getting better. How's that?
That sounds amazing.
That was high level.
Yeah.
How was that? Huh? Okay. And there are pluses and minuses to that. If you are a restaurant owner and you're trying to hire front of the store help, it's pretty difficult right now because shockingly, not many people want to work for $2.86 an hour plus tips. So a good economy makes it difficult for people who are looking for lower end employees. Flip side of that, if you're a teenager home from high school this year and you are willing to work fast food, you're probably going to make anywhere from $13 to $15 an hour, part-time job, taking orders at McDonald's. And that's, not necessarily good for McDonald's, but great for my 16-year-old grandson, if you will. The pickup in the economy has some hit and miss qualities to it as well. If you run a cruise line, the improving economy hasn't done squat for you.
Right. Yeah.
and may not. If you're an airline and the bulk of your profits came from flying people on business trips or overseas, that's not happening yet. Business has picked up a little bit. I talked to a number of, in our business, they're called wholesalers, and they are people who represent investment companies trying to get us to use their investment vehicles.
Okay.
And normally they travel a lot, and they're not.
No.
You know, they're doing Zoom, and so far, as I've talked to people in management at several mutual fund companies and distribution companies, it hasn't hurt their sales any, but it has helped their bottom line because their marketing budgets are way lower.
Yeah.
Their travel and entertainment way lower. So, couple other, pieces of the economy are having challenges. I was reading a post from someone who has a friend who's a home builder, and he can't complete his homes because he can't get hinges.
Yeah.
Which sounds really stupid, doesn't it?
Yeah.
I can't build your house because we got to put pocket doors in everywhere.
Right.
Kind of thing. Yeah. And so, there are some supply constraints. Everybody's, unless you're Rip Van Winkle, you understand that the price of lumber is 1,000 feet of lumber costs almost what an ounce of gold cost a few months ago. Yeah. Literally. Yeah. That's literally true.
Yep. Lumber is now gold.
Yeah. Gasoline is significantly more expensive than it used to be. Price of chicken is ridiculous. Burger King used to advertise a whole bunch of 99-cent to $1.99 sandwiches. And so the Whopper that used to cost you $1.99 now costs $5.50. And going through the drive-through at Chick-fil-A, you might need a loan.
Right.
It's really expensive. My wife and I went to, I think I can mention this because I'm not promoting the stock, but we went to Shake Shack. Did you ever read it? Shake Shack? Right. 2 hamburgers, order of fries, and a milkshake was almost $30. Wow. You get a real meal for that. Right. Yeah. So, well, maybe, I don't know anymore. So, the economy getting better has some good parts to it and some bad parts to it. If you were to graph the growth of the gross domestic product in the United States, it's been a steady climb up from 2009, roughly, after we came out of the credit debacle in 2008. It's been on a steady climb up until actually gross domestic product started to flatten out and decline a little bit in 2018. And then when COVID came around in 2020 was just a disaster. Well, the economy's gotten good enough that that the projections are that sometime in 2022, second, third quarter, fourth quarter at the latest in 2022, GDP growth will go back on trend for where it was from 2008 on. Now, that doesn't represent back to trend from 2003 to 2008. We haven't gotten that back yet, and may not. I don't know if we'll get back to trend that way. But the economy is improving, and in general, that's a very good thing. Yeah.
Well, kind of going off of that, can you kind of give us an overview of the interest rate trends? Because obviously that's a big topic of discussion these days.
Well, I get kind of fascinated by this as I look at non-financial press in a lot of cases. Interest rates are described as just interest rates, like it's this monolithic one thing, but there are a million different interest rates and they do different things. So one of the things that I look at carefully is what the Fed does with near-term interest rates, with short-term rates. So you're talking about Fed discount rate, basically. And that's the only rate that the Federal Reserve has complete control over. Okay. And it's basically zero and has been for a year. Yeah. So investors notice this. If you look at the return in your money market statement, you probably don't have one.
No.
It's pretty close.
Non-existent right now.
Okay, last year I made 3 cents.
Right.
Kind of thing.
Yeah.
So, and you see that reflected in shorter term certificate of deposit rates. If you walk in the bank, and they say, well, we got a 3-year CD for 0.5%. Wow.
Right.
Exciting. The rate that is kind of a baseline rate around the world is a rate on 10-year government debt. So that would be bonds issued here in the U.S., obviously issued by the U.S. government, the 10-year Treasury. And that rate has climbed dramatically from the first of 2020 till now, with a big drop in March of last year, and then a big spike rapidly right after that, and then another drop, and then kind of up to about 1.8% in February, March of this year, with a lot of concern that that was going to take money out of the stock market because people could put money in bonds, and that was an alternative. Okay, but since then, the rate, I think today, if I remember, the last I looked was just under 1.5%, so down from 1.8. And it looks like this might be kind of an equilibrium place, about 1.5%. That would change if and when the Fed quits buying as many bonds as they're buying. When that happens, that's a matter of open conjecture. Right.
Yes. To be determined. Yeah.
Economists are guessing that those changes probably won't happen until mid-year next year. Now, whether that's right or not, ask me in 2 years, and I'll tell you whether the 1 year projection was right or not.
Yeah. Okay. We're gonna come back in a year, 2 years. 2 years. Sorry. Yeah. Yes. Well, with all of that, can you kind of talk a little bit about inflation that's happening?
Sure. Inflation has heated up. Yeah. If you put gas in your car recently, you know that. If you've gone to the grocery store, you know that. My wife expressed the other day how concerned she was that we were going to have to start eating fake meat because there was a ransomware to the largest meat packing company in the world, JBS name, and they were speculating that was going to spike because, and they do beef, pork, and chicken, so it's the trifecta of protein. As it turns out, that didn't happen, probably won't happen, but if you go to the grocery store, you notice that things cost more. If you go to a restaurant, things cost more. I saw a posting from a friend of mine who's a realtor in the part of Phoenix where I live, in the south, in the southeast valley, south central southeast, and he noted that he listed a house a year ago, 1,900 square feet, 3-bedroom, 2-bath house in Laveen, for $270,000, and the same house is on the market for a little over $400,000 today.
Wow,
that's a big change.
That's a big change in a year.
Offset a little bit by the fact that you can get a 15-year mortgage for right around 2% fixed, 30-year less than 4%, and so that helps on the monthly payment. But you think about this. The median home price in Phoenix is about $350,000, I think, last number I saw. If you have to have a 20% down payment and you're a first-time home buyer, accumulating $70,000 is a call to mom and dad,
right?
Kind of thing. It's challenging. So the prices of some things are picking up, and inflation has gone up. We talked about lumber prices. Steel prices are. Okay, political jab here. Okay, steel prices are hilarious. They're up anywhere, depending on the steel, 400 to 700% in the last 6 months. That's a big increase for, in technical terms.
Right.
And yet, U.S. steel manufacturers are still saying that we have to have tariff on imported steel because they can't survive without it.
Okay.
Right. Yeah, sure. Mm-hmm.
Yeah.
Sounds like something some of my teenage grandchildren would say.
The more money you give them, they just have to have it. Yes.
Yeah. So the real question here is not if there is inflation, and there is, okay? I mean, any place where you have gone to a commercial location in the past month has a help wanted sign, and many of them advertising $15, $16, $17 an hour. Amazon is paying up to $20 an hour for some of their operational positions and giving a $3,000 signing bonus. So, again, if you're a restaurant trying to hire somebody for $3 plus tips, not likely.
Yeah.
So the real question is, looking at this from two different points of view. One, these price increases, are they going to stick? Okay, the price of lumber is down 30% in the last 20 days.
Yeah.
Okay, down. That's after having gone up multiple times, but it has backed off.
Yeah.
And part of that is fewer new houses being built because fewer people can afford them, and because they can't afford to buy them.
Right.
It's just kind of a mishmash there. So it's a question of whether these price increases are going to stick or not. And I think some of them, very likely so. I don't think labor costs are going to go down.
Right.
And some of the raw materials, I'm not sure that those prices are going to go down. You may have seen that several auto manufacturers have shut down their production lines because they can't get computer chips.
Yeah.
Well, people will make chips to fill that need, but it takes a long time to build a fab that manufactures chips. But that's coming. Taiwan Semiconductor, which is one of the largest contract manufacturers of chips in the world, is building a factory here in Phoenix. Intel announced that they're building, I believe, 2 new fabs here in Phoenix to add to the several that they already have. Yeah. But you're talking 2 to 3 years for that to come. So, the increased prices typically draw increased supply because there's money to be made, and we're capitalists, and we go make money, right?
It's true. Yeah.
So the real question is, okay, so we muddled along through 2020 with prices really stable or even down. And then some things started to go up in price mid-year last year, particularly groceries, as more people ate at home because the restaurants were all closed.
Everything was closed.
And you didn't want to get the virus. So more people ate at home, and grocery prices started to creep up. And grocery stores, frankly, got to the point where they have what economists describe as pricing power. That is, they could raise prices and it wouldn't hurt. I mean, it wasn't like you would say, well, I'm not going to buy chicken at Fry's because it's $3.98 a pound. I can buy it for $2.98 at Safeway. No, you just went to either ordered it and picked it up at Fry's or ordered it delivered.
I was going to say delivered.
Or you just went to Fry's because you were scared enough just to go to one store. You didn't want to go to 3 to get cheaper stuff. Right? Okay. So they had pricing power, and when companies have pricing power, they raise prices. That's just the way it works. So the question is, with these increases, have things plateaued, or are they going to continue going up? My feeling, for what it's worth, is that I don't think we're going to see a whole lot more bump past here.
Yeah.
I think, and we may see some things, lumber. Yeah. Copper's down about 6% in the last couple of weeks. Yeah. I have a good friend who works for Freeport McMoran, and I'm sure he's crying over that. Yeah. But I just think things are just probably, we're looking at a point where we're finding an equilibrium. I guess that's the best way to put it. Yeah. So that's how I would how I would say inflation is. I do have to. I remind myself that once upon a time I had a 14% 30-year fixed mortgage.
Okay.
And I thought that was a smoking deal.
Okay.
I shopped for a week to find that bad boy. Okay. I remember that we were placing client funds in 5-year guaranteed fixed annuities with interest rates of 15 or 16% a year.
Wow.
It's a pretty nice story, huh?
Yeah.
You put $100,000 in this, and in 5 years we give you $200.
Yeah.
And it's tax deferred. Okay. We don't have any of those anymore.
Right.
However, to put that in perspective, inflation was running at 18% and the prime rate was 21%.
Yeah.
So if the cost of what you're buying is going up 18 and you're making 15, you're losing purchasing power.
Yeah.
And that's kind of a key to look at. So to me, when people talk about, oh my gosh, we're going to have 3.5–4% inflation, I'm just kind of like,
yeah,
it's just so.
Yeah.
Yeah. So that's the inflation thoughts.
Well, with all of those things, how do all of those things kind of impact the market?
That's, this is there in our business, in our profession. We talk about the most dangerous words are, this time it's different. Okay. Well, this time there are some differences.
I was going to say, yeah, this is a little different.
Yeah. I mean, I can't look back and say, well, the last time we had a worldwide pandemic, this is what happened, because 1918 and now don't have a lot of, there's just not a lot of parallels between those two. So what has happened in the market is kind of a rotation from companies that we would refer to as WFH, work from home. Okay, so if you look at some of those companies that do video conferencing, telehealth, cloud-based computing, all that kind of stuff, they did outrageously well last year, like made up returns well last year. I felt sometimes like I was back in 2000 with .com stocks.
Right? Yeah.
And companies that do normal company things, like selling cars, building houses, mining precious and base metals, railroads, funky, weird companies like that. If you made toilet paper or hand sanitizer, you sold everything you could make at markups that were ridiculous.
Yeah.
So to show you how things have changed, I was reading about how some stores are throwing hand sanitizer away. They're taking the bottles out of their warehouses and putting them in the dumpster because it costs more to tie up the space than they could possibly sell them for.
Got it. Yeah.
And I read a lady who bought 25 bottles of hand sanitizer, which she figures is about a 6-month supply for 7 cents a bottle.
Wow.
Okay, so they're not even going to be at the dollar store, or they'll be 10 for $1 at the dollar store.
Yeah.
Okay. Toilet paper, you couldn't get toilet paper.
No.
Couple consumer staple companies that make toilet paper had remarkable earnings last year. Okay. This year they're warning about their earnings because people have 2 years worth of toilet paper in their house already and they're not buying any. So the stocks of those companies have been hammered.
Yeah.
So that's probably the best way I can look at the market. In general, over the long term, the stock market tends to follow the trend in GDP, gross domestic product. And I get pictures, pretty pictures, nice graphs. See, it goes like this. Nice graphs that show, that measure the correlation between changes in the stock market and changes in gross domestic product. And and they look almost like the same line. It's almost a 1-to-1 correlation. So the economy continuing to get better should should help the market perform well.
Yeah.
Now, in the short term, all bets are off.
Right.
Okay? In a 3 to 6 month period of time, that doesn't necessarily hold true. In a 10-year period of time, it does.
Yeah.
So that's kind of how those things all tie together with the market. Inflation is actually good for a lot of companies because it gives them what I talked about earlier, pricing power.
Yeah.
Okay, as inflation goes up, they're able to raise prices. As people make more money, they're able to raise prices. And yes, that is inflationary, but that's not necessarily a killer for gains in the market.
Right. Yeah. So kind of switching gears a little bit, but this is kind of a hot topic, and I just wanted you to kind of give us a general overview of it. But tell us a little about the meme and the crypto stocks and currency and all of those good things.
Cool. Meme stocks. Okay, meme stocks refers to the fact that you can go on a variety of different social media places and see memes, pictures with words about a particular company. Okay, we don't get to talk about particular companies, which is fine, but just in general, some things about meme stocks. For one thing, that kind of stuff has always been with us. I could give you a long list of watching stuff like this happen over the years. Writ large, .com stuff in 99 and 2000. Mm-hmm. If you just had a company and you put .com on the end of the name, you could raise millions, hundreds of millions of dollars. Mm-hmm. And the stocks went up and went up and went up until they didn't. And if my numbers are correct here, the NASDAQ dropped from a peak of somewhere north of 12,000 to about 4,000 in about 8 months.
8 months, yeah.
It was not a lot of fun. Okay? I was here for that. Well, not here, but I was doing this during that time.
He's saying we don't want to repeat that. That's what he's
saying.
saying.
And it was bad.
Yeah.
Okay.
Yeah.
The difference being that there were trillions of dollars tied up in .com stocks, and there are a handful of billions of dollars tied up in these various meme stocks.
Yeah.
There are a couple things, however, that are different about that, because this time it's different.
It is different, yes.
And that is the community of people who invest in these meme stocks look to be semi-permanent. Mm. This kind of stuff will continue to go on. Now, there are some things that are appropriate about that. And I'm thinking of a particular meme stock, probably the first one recently. As their stock price climbed, they sold more stock, collected a bunch of money. And their goal is to reconfigure their business, to change their business model to make it more in keeping with what goes on in the world today.
Oh.
They have a possibility of being successful. I'm not saying that the stock is worth what the price is, but they have a possibility of being successful. There's another more recent meme stock that has raised, technical term here, crap ton of money. Yeah. And they don't have a business model they can change, and they don't have any focus on changing their business model. So this is a business that is losing money. In fact, the prospectus for their last stock sales has a warning in there I've never seen in another filing. Mm-hmm. And it says, if you give us your money, chances are good it's going to all disappear.
Okay.
That's not a direct quote. Okay. But the warning is there that if you invest in this, you could lose everything you put in. Mm. Okay. Are you ready to know who it is? Everybody's excited. Yes, please.
He's not allowed to say.
So if all they're going to do is use the money they've raised to pay ongoing expenses, unless they turn profitable again, it's not going to do anybody any good.
Right.
And in fact, that company, the total value of that company, the number of shares outstanding times the price, is roughly 8 times what the high value of the company was prior to the virus.
Right.
That's ridiculous.
Yeah.
Okay. So that one's probably not going to work too well. Crypto has some of the same characteristics that these meme stocks do, because you have some of the same kinds of investors investing in crypto that you do in some of the meme stocks. there are some distinct differences. Crypto, which has some similarities to gold in that it's worth what someone will pay for it.
Yep.
And there's a relatively limited supply of it in a variety of different ways, depending on which currency and how you mine it, et cetera, et cetera. But there is a constrained supply of cryptocurrency, just like it's hard to dig gold out of the ground. Okay. And there are people who think gold is awesome, and there are people who think crypto is awesome. And as long as they're willing to pay for it, it has a price. Crypto has some advantages over gold in that you don't have to put it somewhere.
Yeah.
I mean, if you own $1 million worth of gold, you got this hunk of
Right.
stuff that you have to guard somewhere, you know.
True. Yeah.
But if you own $1 million worth of crypto, it's held in a digital wallet that you can access from your phone or anywhere else. Another thing that crypto offers that gold doesn't is there are some places you can actually use it as money. One of the problems crypto has is that, you know, if you have dollars and you want to spend it on something, you know that $1 today is going to be worth $1 tomorrow.
Right.
Right.
Yeah.
But if you own Doug coin, which does not exist, okay, but if you own Doug coin and you paid X for it, and the next day you find out that it's worth only 60% of X, and that kind of stuff happens all the time in crypto. If you were planning on buying a house with your Doug coin, you're out of luck.
Right.
You know, just because the Doug coin is not worth what it was.
Right.
So, and dollars you can spend pretty much everywhere. Crypto, some of it you can't spend anywhere. Some of it you can spend in a few places. And I know an automobile manufacturer said they were going to accept a particular crypto. And then a couple months later, they said, "Oh, never mind, we're not." So
probably a smart move on their part.
So, well, I could go into that story, but I have to say things that compliance would tell me I can't say. So
Right.
we'll leave that for another podcast.
Yes.
So memes and crypto have some parallels, but not exactly. In my opinion, crypto has a better opportunity to be worth something in the future than a lot of the meme stocks do. So one last story. In Hawaii, there are so few rental cars that people are renting U-Haul trucks to drive around the islands.
Okay.
Okay. So this is my COVID crazy economic dislocation story. Okay. Because mid-year last year, every car rental company pretty much went broke.
Yeah.
Because no one went anywhere. So they did what they had to do, and they sold their rental car fleets. Okay. Well, fast forward 9 months, and here we are, and nobody can rent a car.
And everyone wants to go to Hawaii.
Well, and it's not just Hawaii. I read somebody who was traveling to the West Coast, I think LA, and he went to rent a car, and they told him it was going to be like $350 a day.
Yeah.
And so, so he was like, Uber.
Right.
And that's a problem because Uber doesn't have enough drivers now. And one guy pointed out that back in the heyday of initial Uber, he went crosstown in LA for $16.
Yeah.
Okay.
It's so expensive now.
He looked to do it this month, and it was $260. He said it cost him more money to Uber across LA than it did to fly to LA.
Yeah.
So now you have these rental car companies that don't have rental cars, and you have automobile companies that can't make cars. And so the rental car companies can't find any, they can't build their fleet. It's a mess.
Yeah.
So note to self, drive somewhere, don't fly and rent a car.
Okay.
But that kind of sums up. And you can weave that through the whole market and through the whole economy, that there are all these differences from the way things were 5 years ago are now. And we have to be cognizant of that as we construct investment portfolios. So we do some things in our portfolios to try to avoid some of the bad stuff and try to take advantage of some of the good stuff. If you have questions, call your advisor.
Right, that's true. Well, we really appreciate you giving us a market update with everything going on. It's been very interesting since we're kind of coming out of the COVID and just watching all these various things going on. And kind of like you said, we don't really have anything in history to really know what's going to happen, right?
We are kind of, there's a joke that I always like about, as I look at the market, I feel like a long-tailed cat in a room full of rocking chairs. So we are just kind of tiptoeing our way through the minefield that the economy and the market is right now.
Yeah, no, it's true. So, but thank you so much for the market update and for joining us on the Wilde Wealth Way podcast today. We appreciate all your good knowledge, and I'm sure you'll be back in a couple months to keep us informed again. So,
sounds good.
Yes, thank you.
Thanks, Jackie. Thanks for having me.
Thank you for joining the Wilde Wealth Way. If you would like to meet with one of our trusted advisors, please go to www.wildewealth.com or call our office at 480-361-6203. You can find our show notes from today's show at www.wildewealth.com/podcast.